morning, students. Let us continue with the capital structure. The next point, that is internal and external factors affecting capital structure. We have understood that company need to collect the capital with various sources of finance in our capital structure. Company may go for the equity share, company may go for the debentures, company may go for the preference share, company may take the financial institution loans, and in this manner, looking to the total capital requirement, company has to utilize all the sources. Now, which are the factors going to decide the capital structure? Why company has to compulsorily select a particular source of finance? Because the few reasons are there behind it, because the few compulsions and the few compulsory factors that make compel a company to go for a particular selection for the source of finance. So these are the factors which today we are going to discuss. These factors are broadly classified into two. One is called internal. Internal factor means within the company the reasons are there, and due to this reason company has to select a particular source. And the external means outside the company. In a general economy, the reasons are there which compel a management to go for a particular factor. Let us discuss first the internal factor. Number one, type of business. What type of business you are doing? Are you doing manufacturing activity? Are you doing the trading activity? Are you providing the services? That is the service like a bank, or service like a transportation, or service like a insurance. So what is your basic activity? That decides the how much capital you need and from which source the capital you have to collect. So the type of your business activity, that is business, manufacturing, or a trade, or a commerce, or a auxiliary services, and these are the basic classification you have to keep in mind. Next is the size of business. Bigger the size of business, more the finance required. Small the size of business, small the finance is required. So your size of business decide that how much capital you are in need. Next, that is the estimation of business income. You have not yet started a business, and you have to decide and estimate the income. But still, you can easily estimate. You have a vision that if I do in this particular manner, for sure I am capable of earning this much profit. So risk what you have to take. That risk, it depends on the profit earning capacity. More the risk, more the profit. Less the risk, less the profit. So what business activity you are going to do, and that decides your income, and income decides the source, that whether equity or borrowed you have to take. So this estimation of business income also kept in mind. The nature and requirement of asset. What sort of an asset you have to buy? What sort of an asset compulsorily must be owned by you, and which assets you are going to use in the business? So asset is one of the factor, because in asset the maximum investment you have to do. When you want to start a company, the basic fundamental assets like land, building, plant, machinery, company has to purchase. In memorandum, you have to write the permanent address. If you have your own land, you can have your permanent address. So normally the asset compose 70% of your investment going to be blocked into the assets. So this decide that how many more asset you need. Attitude of the directors. Directors, the promoters are going to be the director, and once they become the director, all the business policy depends on their wisdom, their thoughts. The miserly thinking director, they think that less number of owners should be there, and we try to manage with the borrowed capital. They don't want more to involve in the business. They don't want more interference in the management. So they are not that interested in equity, which increase the more membership, ownership, voting right. So the mentality of the director, attitude decide equity or a debenture, because debenture holder are the creditor, they are the outsider, they have no right to speak more in the management of the company. So whether equity or debenture, that is borrowed capital, that depends on the attitude of the director. Next is financial requirements. Total. How many elements are to be considered to decide the total finance you need? How much? It's a big figure. So big figure required a more sources of finance. So your financial requirement also decide how many source you have to utilize. Next that is the duration of the capital requirement. If you need a particular portion of capital for a short term period of time only, then your selection will go to the debenture. If you need a finance for the longer period of time till the existence of the company, you have to go for the equity share. So how much period the finance you need, that decide the source of finance. So these all are the internal sources of finance factors which you have to keep in mind while selecting the source of finance. Now the external factors are also there. So many external things compel you to take a certain decision. Number one, condition of a capital market. What sort of a capital market situation? Nowadays, if you have observed, the Sensex is 46,000 plus. Your father and your grandfather, they have never seen such type of Sensex figure, but it is there. So this is to be called the capital market in a boom condition or in a depression condition. Boom condition means consistently markets Sensex going on up more and more. If a favorable market condition is there, everybody feel like investing into equity and to become rich overnight. And so it is easy for you to get finance through the equity. Second, a depression. When the consistently the share price fall down, in the 2008, the Sensex gone down drastically. And at that time, it's not possible for you to collect the funds through the equity. Whatever the reason, you won't, but you won't get response from the market. So when there is a recession, people will prefer to go for the debenture, secured investment, secured capital, secured rate of interest, and some kind of, you can say that, miserly attitude. No risk taking, because we never know what happened with the market. So this market condition decides the equity or a debenture is comfortable. Next, that is the present rate of interest. Everybody want a return. The rate of interest prevail in the market is a very important factor which decide equity or your debenture. The capital market, if the rate is high, too much more rate of interest. Earlier there was a rate of interest up to 15%. In the government securities, in the fixed deposits, if you put your money, you get 15% return. At that time, people prefer to put their money for the fixed deposits and all. Nowadays, if you see the rate of interest into the market, it is gone down up to 4% and 5%. So people don't prefer to invest into the fixed deposit, into the that debenture and all. It's better that we go out and take a risk and go for the equity. So rate of investment, interest, that also decides whether you issue the equity or you issue the debenture. The next, that is the cost of capital expenditure in issuing the security. How much you have to pay as a commission, underwriting commission, the application form expense, the brokerage expense, then other expense, cost of raising capital. If it is too much, then you have to decide the source of finance accordingly. So what sort of a situation, how much you have to spend to get the money? If you have to spend too much, then you may go for the sources which are the internal sources or a zero cost sources of finance rather than going for the equity and debenture. So that is cost of raising capital also to be considered. The legal restrictions. When you are in the market, you have to obey the rules and regulations of Security Exchange Board of India, SEBI. You have to listen the rules of RBI, that is Reserve Bank of India. You have to obey the Companies Act, now the prevailing Companies Act, that is 2013. All the rules and regulations are to be fulfilled, and accordingly you have to go for the source of finance as per their guideline, as per their restrictions. Next, that is the taxation policy. How much tax to be paid? If you raise the finance through the debenture means you have to pay interest. Interest means you put that interest expense on the P&L debit side, which reduce your profit only. When there is a low profit means low taxation. While if you issue the equity, equity means dividend. Equity means after payment of tax, whatever profit remain, dividend to be given out of it. So through the equity, dividend, that what you are distributing, there is no taxation benefit on the dividend. So tax policy decide whether you prefer debenture as a source of finance or equity as a source of finance. Next, that is a institutional investment. Institutional investment are the big source, helping source for the getting finance for company. Banks are there, insurance companies are there, financial institutions are there, either of a state government, either of a central government, and the financial. You have heard the Unit Trust of India, you have heard that IDBI, you have heard the all financial institutions which are helping companies. So underwriting facility also they provide, buying and shares also they does, the buying of debenture also they does in a bulk, in a huge. So if the financial institution support is favorable, it is very easy for you to get finance from market. Next is the foreign institutional investors. Here the foreign FDI, you have heard economy is slow down. Nowadays our economic growth is not that good looking to the 2020 due to the COVID and all. But still the market is flourishing. Market is towards the boom. How it possible? Because the foreign investors are investing in our securities, and because of their buying, the market is rising, and because of that you have a growth in the equity. So foreign investors, their positive attitude towards your stock, towards your investment or the securities, then they will also, one of the factor which decide whether equity is favorable or a debenture is favorable. So in this manner, when you have to raise the capital from the market, your capital structure decision very much depends on internal and external factor. This question, students, you have to prepare for the 5 marks, or it may be for the 3 mark question according to the weightage asked by the in the exam. You have to write in detail and you have to write the present the answer. So this is one of the important question from your exam point of view. Thank you.